Good morning, good afternoon, good evening, wherever you may be. This is David Duford here at Final Expense Agent Mentor, where I help people like you succeed in the insurance and final expense business. And today's video is going to be about answering the question, how much can you make selling mortgage protection insurance? I would imagine the reason you're here today is because you're interested potentially in selling mortgage protection insurance and want to know what kind of upside potential there is in the business. Maybe you sell another product, maybe you're looking to get into the life insurance business, or maybe you've seen a little bit about mortgage protection from the other organizations out there and want to validate the type of upside potential that there is. If any of that fits your profile of what you're looking to accomplish, then stick around because we're going to spend a lot of time doing a deep dive and answering all of those questions in very much detail. So let's start off with a little bit of an overview about who I am, and what we're going to talk about today. I'm going to introduce you to myself and my marketing agency here shortly. And I'm going to describe to you what actually is mortgage protection insurance. In case you've just heard of this, but you're not sure exactly how it works, we'll make sure to cover that in just a moment. After that, we'll talk about the income advantages of selling mortgage protection insurance, as well as the disadvantages. We're going to take a biased role here to describe to you what you're going to look forward to and what some of the drawbacks are of selling a mortgage protection product. We're going to talk about the cross-selling opportunity. A lot of people wonder if selling a product allows you to sell other products, so we'll talk about that for sure. We'll do a numerical breakdown of income earning opportunity in selling mortgage protection insurance. So this would be a really good example of what you could make potentially, and contrast that with what it would cost you to buy the leads and to fund your business. So we'll get a whole perspective there. Then I'm going to give you my final thoughts and describe the next steps of getting started selling mortgage protection insurance. Okay, so let me introduce myself to you formally. My name is David Duford. I am the owner of FEAgentmentor.com, or Final Expense Agent Mentor. I've been a licensed life insurance agent since 2011. I've helped over 3,000 families across the nation with their life insurance needs. I'm also a published author of several books, one of which is called The Official Guide to Selling Final Expense Insurance. Check it out on Amazon if you haven't already, and feel free to pick it up. I'm also a life insurance agency owner and trainer of 400 agents nationwide. I sit down with agents, train them personally so that they can help people in their own community with life insurance needs. And not last, but least, almost last, YouTube creator for insurance sales training. You're watching a video right now, probably on YouTube. I've got lots of videos that I come out with really every week, about 5 every week, on all sorts of subjects related to insurance selling, whether you sell mortgage protection, final expense, and other insurance products. I am dedicated to helping agents succeed in selling because we need them to get out there and help people with their insurance. And then last but not least, of course, I'm married with children, my 4th one on the way. So at the filming of this, so wish us luck. So before we go any further, let's describe and define what exactly mortgage protection entails and what it does. So mortgage protection insurance is life insurance sold with the goal of paying off the mortgage upon passing of the insured. So people buy mortgage protection because they don't want their loved one to end up in a position where they're fully responsible for the mortgage payments or the mortgage itself, and with the potentiality of losing that house, their life's dream, because of an untimely and early death. So people buy mortgage protection to prevent that from happening, whether it's a lump sum to make payments for a period of time, or whether it's to pay off a portion or all of the house. These are the ideas behind the insurance product. So typically, what makes mortgage protection attractive in a sense, as we'll get into in a minute, most mortgage protection products are non-medicals and no-exam term life insurance. So when I say attractive, it's not so much the type of insurance, but the fact that you don't have to go through full underwriting. That means you get a decision fairly quickly. That means you get paid fairly quickly, especially since most of mortgage protection is financed by the activity of buying direct mail leads. So this is why this is good, in a sense. You simply write the application in the home with the client, and you get a decision either way, and there's no multi-month timeline to get an approval completed. Now, That's not to say that there aren't any circumstances where fully underwritten products are used, or even simplified issue whole life insurance like final expense products, if you're familiar with that. They could definitely be used in these situations and are probably used on a daily basis for many people. Again, it just depends on the situation, but your bread and butter business are going to be these non-med, no-exam term life insurance products when it comes to a mortgage protection prospect. Most commonly sold after a mortgage loan closes and is filed with the county. And what's interesting about this is that a mortgage, the filing or the buying of a house and filing a mortgage creates what I call a really opportune moment to generate a high quality lead, because we know that these people just made a huge purchase decision. And with any big purchase decision comes a load of new thoughts and ideas. And it's a life event. And mortgage protection, or just life insurance in general, is driven by life event issues. And so this is something that targets that life event, and is a really good opportunity to get people to open up to these ideas of buying a life insurance plan. And mortgage protection mostly is sold to people who still work versus those who are retired. You'll get people who are retired or semi-retired, but most of these people you're going to see at the kitchen table in the evening hours. So let's talk about income advantages of selling mortgage protection insurance. So first of all, one of the greatest things about selling mortgage protection insurance is that there is a high first-year commission opportunity. So one thing that's cool is that you're selling a higher premium in many cases because you have people who work and can support a higher commission or a higher premium, which results in a higher commission. Compare that to, say, final expense insurance, where your average commission payout is probably going to be approximately $600 to $700. With mortgage protection, it's much higher. It's $700 to $900. I've seen averages above that. Of course, your mileage may vary, but generally speaking, it seems to be that the premium sizes as well as the commission sizes are much higher selling this particular type of life insurance product than others. Moving on here, the business is very high quality. So I've talked to a lot of mortgage protection agents, and we talk about persistency. And if you sell this product correctly, which isn't hard if you just follow some steadfast rules that I think are true of any selling of any life insurance product, you can safely expect and anticipate a 90% plus first year persistency. So what that means for you new guys, persistency is defined as what business is still on the books after a period of time. The most relevant persistency number is how much of your business is on the books after 12 months. So what we're saying here is that, yeah, sure, people change their mind. They're not going to keep it. Financials change, but 90% of your business with a mortgage protection product, generally speaking, stays on the books well beyond the first year. So this is great because there's less stress on your behalf to go chase down business that cancels, lapses, non-pays, and you can focus on writing business more. You don't have to focus on doing service or doing callbacks and that kind of thing. So again, this is one of the great advantages, again, because many of these people work, and at the timing of selling this, you're targeting them in a mindset in which they're shifted towards, we have this huge purchase decision, and what does happen if I die? We need to be protected. It's a one-call close sales system. So I really like mortgage protection because it is not a multi-call, complicated and technical sales process. It's very simple. You sit down with your prospect who sent the lead card back. You ask them why they sent the card in, what they're looking to accomplish. You gather facts about why it's important, as to their opinions on why it's important to have coverage in place, to get them emotionally involved while pre-qualifying them. You figure out what their health is, and then you propose several options based off of what they could potentially qualify for, and you ask them to pick one to get the process started. And that's how 90% or more of sales calls go. It is a business in which you can safely anticipate you're going to get a buying decision on the first call. Any percentage higher than 10% of the time where that doesn't happen, you probably need to hone your sales skills down. But the great thing about mortgage protection is it's a function of seeing the people, writing the business on the first call, and repeating that process, and not having to do some elaborate sales routine. potentially get a sale. We mentioned this in the last slide. What mortgage protection is, essentially, is a simplified issue product. So understand that traditionally, life insurance was sold as a fully underwritten product that required examinations, physicals, specimen withdrawals, meaning blood and urine, and would take usually months to get an approval. Well, with a non-med policy, and with insurance companies becoming much more competitive, they've cut down on that requirement to do examinations. And so in exchange, what's happened now is that you can usually get a decision within days or a week or two for a non-med application, because what they do, instead of doing the elaborate physical and specimen exams, they actually just pull your information up on what's called the Medical Information Bureau or the prescription check, and they check that against your answers and then determine insurability based off of that, again, with no exam. Sometimes there may be a phone interview involved, but very rarely there is. It's just you submit the application and it goes through or it doesn't. So it's very powerful. What this does is your client gets approved faster, and in exchange you get paid faster, which is really important because mortgage protection, like a lot of these systems that I like to use that are very simple, that is based on a lead program and based on repetition and a simple sales and product process. The deal is you got to make sure you're cash flowing in any business as quickly as possible. And when I say cash flow, what I mean is you're going to have an outlay of money into leads if you do the program correctly, no matter what program you do. Well, how much outlay there is versus how much time it takes to receive income is very important. 1 month compared to 3 months is huge. That's why doing traditional underwriting is really tough for a lot of guys, because they can't put the huge money out to support traditional underwriting in such a fashion, because it'll literally take months to get paid in many cases. So a simplified issue, you don't have that problem. You just get the application completed, usually an electronic application that automatically submits to the home office, and you get a decision within usually a couple days, weeks or two. And then payment starts and you get paid the advance commission. And with that, again, fast pay, typically several weeks after the policy issue. That's being conservative. Sometimes it's a little bit sooner than that. So last benefit here, I think this is huge too with mortgage protection, and it all goes back to the fact that you're targeting a list of people in the middle of a life event where their mindset is really invested in this particular concern. With mortgage protection, you're going to see a lot more appointments that keep, and you're going to close more as a percentage of those appointments that you keep. So for example, if you look at final expense, great business. There are definite advantages final expense over mortgage protection. But final expense, what happens with final expense is that you run leads and you set appointments. It's very likely that in most cases, you're based on the system that we teach, that if you see 3 out of 4 of your prospects in appointments, then you're considered doing fairly well. There's just a lot more no-shows for whatever reason. Maybe it's because we're dealing with primarily a senior population. Maybe it's because of how the lead is generated. There's some good reasons to explore. But either way, that's just the reality. Whereas with mortgage protection, it's very likely that you'll have perhaps, if you set 15 appointments in a week, you may only have 1 or 2 no-shows, if that. And if they do no-show you, they make sure to contact you and let you know, hey, I can't make it, or they stick a note on the door and say it's just not going to work, something came up. They're a little bit more friendly with the process versus final expense people. They'll just show up and they'll just disappear and you don't know why. So, and then when you sit with these people, because the power of the lead that you're using, because it's so specific, it's going to be a very different circumstance to where they're going to be much more inclined to have interest in buying life insurance because of the lead specificity and also because of the life event that they're experiencing. So bottom line, there's a lot higher conversion ratios on both appointment setting and also selling of policies. So it's very good relative to final expense and other life products because of that, again, the power of that lead that you're generating. So just like I said up front, I also want to mention the disadvantages of selling mortgage protection, because it's not all rainbows and sunshine. Really, I've trained agents for years and years now, and some will ask, well, why should I do X insurance versus Y insurance, and or they'll complain about one particular aspect of the business. And the truth is that if you've been in this business long enough, you understand that some setups are ideal for certain personality types and others aren't. And you have to really understand that there's no perfect product that's just everything's great. If everything was great, then it would be a wage earning position where we would make $10 an hour if we're lucky, because we're an order taker. The very nature of sales is there's difficulties emotionally dealing with the frustrations of sales, and that's the same with anything, and certainly the same with any insurance product. So let's talk about the disadvantages. So one of the disadvantages of mortgage protection is, despite its high first-year commission, there's very little in renewal opportunity on the mortgage protection products themselves. Most of these term life insurance products pay minimal, if any, renewal. Most don't. And so you're not going to be able to create a trail or a stream of predictable renewal income. It's just not in the cards when you sell primarily a product that is a term insurance product. So if you come to the point where you want to develop passive income, you're going to have to start doing other activity to supplement in order to build up a passive income portfolio. And this is an important longer term decision that you do have to make. I don't think it's something you necessarily have to be a huge obstacle now. Getting started selling something you like is important. And but as much as you think that you'll want to work and grind it out for the next 15, 20, 30 years, one of the biggest advantages of insurance is that you can build a renewal stream. And you should really figure out within the first 5 years how you're going to supplement your active income with a passive income or with a renewal income stream, because that's really where you tap into the beauty of selling insurance. A lot of the work with selling mortgage protection is a mid-afternoon to late evening work. So we can't help but the fact that the people we see work for a living, and we have to see them when they're not working. So that means we have to sit down with them usually in the late afternoon, early evenings, late evenings even. And so that means you're going to be out several days during the week at night. You'll be home in the morning most days, but during the night you'll be seeing people at 3, 4, starting off, maybe up to 7, 8, 9, 10 if later. Sometimes it just depends on when these people get off. So you've got to be really open-minded to working a weird schedule. And because of the weird schedule, you may only get 3, 4, 5 appointments a day tops. You're not going to be able to stack a ton of appointments like, say, final expense, where you could literally do, if you get really good, 10, 15 appointments in a day, because you can see them in the morning and the evening. So again, it's just the nature of the beast here. There's going to be a lot of kitchen table nighttime work here. You don't have to work every night. You're going to be calling to set appointments. And if you time your schedule right, maybe you'll be out 3 nights a week. You can get your 10 to 15 appointments in that period of time. So with another disadvantage, and this is, again, what I teach in my recruiting business, is that I like simple products with a simple marketing system that's replicatable, that's duplicatable, and is scalable, and is not complicated, that doesn't require the agent to think much, that just put their money up and then start working the leads when they come in and basically apply themselves in a work fashion. Unlike a lot of other lead programs, the mortgage protection one has a much higher price point for leads other than other lines of insurance. And again, let me explain why. This reason the price point is higher for mortgage protection comes back to the same point I've made several times, the fact that you're generating a list that is very specific. Most lead programs, whether you look at final expense, you look at Medicare, you look at other lines, they're a broad-based type of lead where you paper an area primarily based around a large age range and an income bracket, and you paper that area with leads and hope to get back 1 to 2% roughly in response rates. And some people will be interested, some won't, but it is a way to generate a lead that is reasonably priced. Whereas with mortgage protection, the only group of people we're after are those people, especially if you want the freshest and best leads, the only people we're after with mortgage protection leads are those who have just closed on a home and the mortgage has been filed at the county level within the last week. And so that data costs a lot of money. In order to find it, in order to account for it, that costs more money than just a regular list of people over 50 or people turning 65. Now, you have to couple that with the fact that speed is really important in the mortgage protection business. And what I mean by speed is important is that you have to understand there's a lot of competition, as I mentioned here, in the direct mail marketing space. What I'm describing to you is not unfounded. Everybody knows that direct mail is king in mortgage protection, especially the big players, all the multi-level marketers. And so you've got to find a way to get these leads as quickly as possible to the prospect. So what happens a lot of times, if you want a good lead program like what we do, our leads go out, we collect information on Friday. We print those leads and get them off by the latest that following Monday, so over the weekend. It goes out first class. Many leads go out third class or standard mail, which means they go slower. Well, our first class is quick. So our leads get to our prospects within a couple of days. And then they get sent back first class. And then we begin to receive them in that second week. So you're literally getting leads back within weeks of them actually closing on their house. So the beauty of this program is that many times you're the first guy in the door. Whereas with other vendors, what they're doing, especially the multi-level marketers, they're constantly mailing and just accumulating leads, or they're reselling you old leads or selling you leads that are just old, that haven't been worked or have been worked. Whereas this is a fresh lead generation program, which is what you really need to do, whether it was my program or not. You got to have people to see quickly because it's top of mind, and you got to act on that life event while it's still fresh in their mind. So yeah, it's very competitive. A lot of these people who are mortgage protection clients are going to complain. They've literally gotten a dozen mailers very similar to ours before all said and done. And so it's competitive, not in the selling sense. First guy in wins. The guy who gets in the door, makes a good connection, offers a good deal, is going to make the sale. Whereas the guy who is doing the agent where it's competitive at is there's just so many mailers that are used, and that suppresses response rates. That accounts to some extent for the higher price point on the leads. And if you're slow to the bat, you're going to feel the competition press, and it's going to be harder to get in front of these people. The income is vastly activity driven instead of passively driven. So like I said above, the fact that there's no renewals means that you've got to go out and get it every morning. You wake up unemployed, since this is straight 100% commission sales. You've got to go call people, set appointments, drive-bys, see people, try to get in, sell insurance. I mean, it's just the nature of the beast. Your initial couple of years selling this stuff, if you're not recruiting or if you're not selling a passive driven product, is it's all activity driven. You've got to be in the situation where you're seeing the people constantly, and there's no way around it. Again, and here's another factor. The mortgage protection market in its heyday, back at its peak, was back in the mid-2000s when everybody and their mother was buying houses. There were liar's loans and subprime loans where people didn't even have to do credit checks to get loans and didn't have to provide tax statements. So people were buying a ton of house without a lot of validation. And so lots of buying of houses was going on. So a lot of mortgages were filed. And so it was a great time to be a mortgage protection agent because there was tons and tons of data, and you could stay relatively closer to home and stay busy with new prospects. Whereas after the housing crisis collapsed, mortgage protection kind of fell on hard times. Now at the filming of this in the late 2000 teens, it's definitely come back. It's not ever going to be back in any time soon like it used to be. But still, what happens is because we use a very specific list, a lot of this goes back to the list. You may not have a lot of people selling or buying their houses in your area every single week. I'll give you the perfect example. If you want to run this on a full-time basis, which in my opinion is 20 leads a week, you're going to need to cover a 150 to 200 mile radius and be willing to drive that on a consistent basis, or you got to be willing to drop larger cities that are several hours away and work those areas and even potentially stay overnight a couple of nights. So I've talked to a couple agents. I know of one agent that lives in Dallas and will drop leads in El Paso. So this person will drive 9 hours to go to El Paso, work the 15 or 20 leads every couple of weeks. It's very good money, but and that's why she does it. But regardless of that, it is something that they make the sacrifice for. You're somewhat of a road warrior more than a lot of other lead programs. But in my area, I think I was mentioning, so where I live in a medium-sized town. And all around me are medium-sized towns within 2-hour drive, except Atlanta. Now, Atlanta's huge. But in order for me to get 20 leads a week, I would have to cover a city that's 2 hours away from me, another city that's 2.5 hours away from me, and then several surrounding counties of each of those cities, my city, and then suburban Atlanta, just to get 20 fresh leads generated weekly. So to me, that's crazy, right? I mean, I can't be in all those areas all the time. And so, but that's what you have to do in order to make this successful. So a lot of agents, what they do is they work a large metropolitan area. I knew of one agent that lived in rural Ohio that would drive to Columbus or Cleveland, and because those are very big cities, and work the leads that are in and around those counties, because he could get the required 20 leads a week. So this is something you have to commit to if you want to do this full time. You can't just work, especially if you live in a rural area. You might get only 30 sales a week of a house, and if response rates for this particular product are 1% to 1.5%. So you may not get any leads at all. So you got to work these large areas in order to really maximize your time spent. Okay, so let's talk about cross-selling opportunity and selling mortgage protection. So one of the best benefits of working the mortgage protection market is that there's a lot of cross-selling benefits the agent is going to get either in the short term and or the long term. So when I say cross-selling benefits, so obviously our goal is to lead with a non-med term life insurance product to convert these people into some kind of client so we can protect the home and protect the lives of the people they leave behind if they died. But the great thing is that because these people are working types and because they're in the grind just like you and I are, their needs and desires are going to change. It's likely that many of these people we see will start to make more money down the line. They'll have career enhancements. They'll run into more money. They'll get out of debt. They may move again in the next 5 years. And the smart agent who's in this business for the long term will recognize this opportunity and realize that one of the biggest goals that one should create with mortgage protection is creating a clientele. And when I say create a clientele, it's that over a 5-year period of time, roughly, you'll create a book of business of 1,000 people or more that you can focus your efforts on doing reviews of policies, of adding coverage, of cross-selling different products, whether that's, as we'll talk about here in a minute, other life insurance products or indemnity products, that really it's all for the taking. And that's one of the beautiful things about this business is a lot of these people prefer to work with people they've already sold to or already bought from. And you're in a perfect position long-term to provide that. So some short and long-term opportunities include whole life products. You may sell a simplified issue term product to them. You may work on converting those over to whole life and explaining some of the benefits of permanent protection and the advantages of having a cash value driven whole life product. Again, a lot of time the goal is just to make these people a customer. A lot of people like to go in and sell the big stuff, sell the large cases or go whale hunting right away. But sometimes the best way to eat an elephant is one bite at a time. So you can go back and sell smaller whole life plans, final expense plans, convert portion of the term insurance plans. There's a lot of long-term strategies to continue to sell insurance and convert some of that term. You could also sell index universal life products. A lot of people like this idea. They find people who are interested in investing and they're interested in accumulating money for retirement. And so the IUL products are a good opportunity to show a lot of these prospects. I mentioned earlier indemnity products, cancer insurance, critical illness insurance. A lot of that sometimes is sold within the life insurance, the non-med life insurance products themselves, but you can get standalone products too and cross-sell those as well. And then if you're dealing with some older clients, which you will, there's definitely opportunities for final expense sales. So you're going to find circumstances where you've got somebody who's 67, 68. You sold them the term insurance product to protect the mortgage, and you find out through fact finding that there's a Medicare supplement they're frankly mad about because it's gone up twice and their premiums increased 50%. They've never used it. Well, if you offer Medicare supplements, you can replace what they have as long as they can qualify, save them a ton of money, and begin to develop a renewal stream. Most Medicare is highly renewal driven, and it makes for a great opportunity to, again, sell more insurance, help you out, help them out, and everybody's happy. Same kind of market, annuity driven business. A lot of people have parked money that they're not doing anything with, such as in CDs, especially the older population. And you can work on rolling some of that over and creating a higher insurance opportunity. So again, this is one of the biggest advantages of, I believe, mortgage protection, is that you're in a situation where these people have a lot more life left in them. And life throws all sorts of curveballs. Life presents all sorts of opportunities. And life insurance is all about solving problems or concerns that people have. And certainly as we get older, those concerns usually magnify. They don't go away. So the smart agent, you should be the smart agent. If you get involved in this business, really any insurance business, but especially this business, look long term. Focus on making these people clients, and look forward to the fact that there's all sorts of stuff that you can sell. You don't have to know all this stuff either, guys, and I'll mention this too. A lot of people think, I got to know all of this. I got to be on top of all this and be an expert. No. Focus on being a good term insurance, understanding the term insurance products that you sell, understand what motivates somebody to buy mortgage protection. And as you go through your career, you'll begin to develop an understanding of these products, especially if you work with a mentor that understands these and explains it to you and can build value with you, so that with your clientele, you can begin to offer this kind of stuff to them and continue the process of developing better relationships and better clientele. Okay, so let's actually get into the numerical breakdown of the income earning opportunity in mortgage protection sales. So we've talked a lot about the pros and cons, why this is a good business, what the long and short term opportunities are. So let's look at the actual income earning opportunity that you could conceivably do at selling mortgage protection insurance. So we're going to assume the following. So there's some things we got to assume when it comes to the numbers. So first of all, we're taking a look at 15 leads weekly. And I'll mention this as before we go. You can scale this up or down, whatever it is that you want. It's totally up to you. But 15 leads weekly is what we're looking at. That's a good number to start for a lot of new agents, because you're going to set a lot of those appointments if you learn your appointment setting script very well. And then so the weekly cost for leads is going to be somewhere between $650 to $700. Depends on the vendors that you use. So I just scaled it up closer to the high end to give us a little bit more realistic expectation. So I said $695 weekly lead cost. We're going to assume a 10% cancellation lapse not taken ratio. So on the income, we're going to subtract 10% right off the top, just to give us a realistic expectation of real long-term income over the first year earned. We're going to assume a monthly $500 travel and gas expense as well. The average commission we're going to take is an $800 commission. I'm averaging that. It could be higher, it could be lower. This is kind of a middle of the road number. The average appointment set rate off of 15 leads, we're going to assume you're going to get 10. We're going to assume that out of that 10% are not going to show up, so let's say you only see 9 of those 10. And the close ratio, we're going to assume, is 2 policies for every 3 completed appointments. So you may be wondering, well, that's pretty high. That's 67% conversion ratio. Well, you have to understand, generally a lot of these leads we're going to be seeing are people who are spouses. And obviously, one person shouldn't be insured, both should be insured. I own out life insurance on myself, but my wife definitely needs life insurance, and she has it. And why does she have it? Even though my wife stays at home, she's a homemaker, she takes care of my children. Well, that is an economic activity. Sure, there's no money made from it, at least initially, but there's a lot of value in the fact of having, imagine if your spouse at home dies. Think of what it would cost to replicate that activity that she did. Somebody who makes the home, somebody who raises the kids, somebody who carts the kids around to do things, prepares the food, cleans the house, takes care of me. It's pretty expensive activity, guys. So you should always insure the spouse as well as the breadwinner. And so that's why you see 2 policies for every 3 completed appointments, because it's really important that a lot of these people you'll see are husband and wives, and you get them both insured. Not just one, but both. Some kind of insurance is important. And so you got to write something on each of them. So that's why there's a higher amount, whereas a lot of these people say final expense, 3 out of 4 or 2 out of 3 are single, they're widows, they're on their own. So there's a lower close ratio as a percentage of compared to leads and appointments. Okay, so let's take our numbers we looked at, and I'm going to go through this slowly. You're, of course, reverse the video if you need clarification. But we got 15 leads a week. So here's what we can reasonably expect from the guy who's going to actually work, follow the directions of what I teach to sell. This is what I would expect. He should get 10 booked appointments. So most of these will be booked over the phone, since a lot of the work you do in mortgage protection is phone-based. Sure, you can run by and try to get in if you can, but there's some geographical restrictions to that because the leads are many times very spread out. You should be able to complete 9 presentations. So when I say completed presentations, you should be able to get into the door and begin a sales call. Again, it's one of those, something's going to happen. Anticipate that somebody's going to no-show you. So you should complete 9 presentations. And again, out of those 9, you probably will have, not all of them will be married. So we're not going to say there's going to be 18 prospects, but you may have 15. So out of those 15, somewhere thereabouts, there should be 6 applications closed out of those 9 booked appointments. So if we take our $800 commission average, we multiply that by 6 applications, that's $4,800 in first year commission booked. We also have to anticipate that 10% of that is going to fall off. So for the sake of accurate cash flow estimation, let's deduct 10%, and that leaves us with $4,320 of anticipated first year commission after 10% fall off. Now remember, guys, when you do any kind of life insurance sales, your advanced commission, most carriers will advance you 75% of what you'll make in the first year. So if 75% of what you'll make is of $3,420, what you're going to get is about approximately $3,240 of those dollars, okay? So that's what you're going to cash flow within the several week period of time after you close these deals. Then you're going to subtract $125. That's, again, a fourth of $500 because it's just 1 week's worth of production. And your $695 lead cost, and that's going to give you a $2,420 weekly cash flow, which is approximately a $9,700 income on a monthly basis, of which is a approximate $116,000 annual earnings. So again, this is all for the sake of example. This is not meant to be a promise at all. I don't know what you're capable of. You may fail out. A lot of agents do in all life insurance business. And your mileage will definitely vary. Understand that this does not take into account, however, any increases your commission level that you get, and plus cross-selling opportunities. So I kept this just a very basic for a new agent who's going to start off and then not know everything, but then over time become a lot better on the phone, to book more appointments, become a lot better in a presentation, to sell more of the people they may have missed, plus have access to more carriers, and then also recognize this cross-selling opportunities. Maybe they start off and they only sell the mortgage protection products, but then they understand what to look for to sell someone an IUL or a whole life product, and there's some definite interest in there to supplement that life insurance sale with something like this. So I'm not trying to count that because I want to be conservative in the estimation of what's actual in this business. So again, bottom line here is just an estimation of what to expect, what I would expect from a new agent. And your mileage will definitely vary, however. Okay, so let me give you some final thoughts about the income earning opportunity of mortgage protection sales. So first of all, look, this is sales, all right, guys? You're on a straight commission. You wake up unemployed every morning. By no means necessary am I suggesting that this business can be reduced realistically down to some sort of equation that you literally get up and this is what you expect every week. You should expect success, especially if you expect yourself to go out there and work and have a daily, weekly goal. But the truth is you're going to have good, bad, and ugly weeks selling. I've been doing this since 2011, and I'm going to tell you, I've done everything right where everybody figuratively throws their checkbooks at me, and I seem to just write the check that I want to as far as what I make. And then I've had weeks, even the following week, where I do everything right. Nobody is interested. They all throw me out. They think I'm full of crap, and it's crazy. It's mentally, psychologically damaging sometimes. And so it's the truth of mortgage protection too. Like I said, nobody's paying you money on a wage basis to go to work. You've got to go find people and sell them and close them. You have to find it and kill it. That's what we say in this business. Figuratively, of course. You've got to go get out there and see who has the motivation and really the inherent love of their family to protect them. And that takes hard work, takes rejection, takes all the things you're going to experience that any salesperson is going to experience. And look, nothing's guaranteed in life, okay? You may not succeed in this business or anything in it. It's very difficult. It's not meant for everybody. That's why the money is good for the people who work hard and stick to it. The money is good because it's a tough business and not everybody can do it. That's why 90% of the people in this business fail. And mortgage protection does, luckily, I think this is another thing about this business that's nice, is there is some level of scalability built in. So what I've seen the top agents do, the ones that really just want to work and work and work, they can hire appointment setters and maybe hire a part-time person to do applications. Maybe not, but mostly the appointment setting. And they can run 4 days a week in the field, maybe 5 days, and they can work 4 or 5 appointments a day, and then work 15 to 20 appointments a week as opposed to the 10 that I showed you, and significantly scale up their business so that they're doing a ton more activity and writing a ton more business. One of the great things about any insurance business that has a simple marketing system is its ease and scalability. A lot of people fret about the idea of, well, how am I going to make more money? What if this thing stops working? Well, as far as I can see, post office isn't closing anytime soon. And people will continue to buy homes in good times or bad. And all you need to do is just get enough people that express interest and work hard to go see them. And then you'll scale, even if you just maintain a normal level of skill level, which for most people isn't the case. They get better as they do more. By just increasing your actual activity level, if you double your activity level, many times you'll double your income without an increase necessarily in your skill level. The reality is if you increase your activity level and increase your skill level, then in turn you'll have a multiplier, an exponential effect on your income earning opportunity. Okay, so let's talk about some next steps in the mortgage protection market. If you like what you've heard, if you think the mortgage protection insurance sales market is right for you, and you want to, and you value training, you value access to a coach, and you value access to a program that will allow you to dial into a program so that you can experience the best modes of success, then understand that there's lots of opportunities out there, and this is something that I can do. I have originally worked primarily with final expense agents. I've made a decision in my business to branch out to help other agents in other lines of business, and one of those is mortgage protection sales. So let me tell you how the program works to give you an idea of the details. So first of all, like I talked about in the beginning, the success or failure beyond hard work ethic of a mortgage protection agent really revolves around a marketing system. You have to have people to see in any sales business. And what you don't want to do as a new agent is try to figure out how to do the marketing. You don't want to do all this research to figure out what the lead has to say, or how to mail the lead out, or setting up a postal permit, or dealing with lead vendors in excruciating detail. Ideally, what you want to do is focus on learning how to sell this product and let us take care of the back-end marketing aspect. So we have a comprehensive direct mail marketing system. The concept is very simple. You pay for your leads. We set you up in the program. We tell you where to go and how to set it up. and within a couple of weeks you begin to get leads. And then you go to work and you sell, and you put your marketing program on autopilot, so every single week you're getting fresh, exclusive leads that are not sold to anybody else. If you've worked with any other multi-level marketing firm, you know that they'll resell leads. You know that they'll sell you old leads that are passed off as new. With our program, all you do is work fresh, exclusive leads that are never resold, that in fact we have no interest in reselling, because what we have an interest in is helping you sell more insurance. So in exchange, in my organization, the way I make an income is off of your sales. So my vested interest is in how can I get you to sell, because that's how I make an income. You also get sales and product training. So of course you've got to learn how to sell effectively, and you've got to understand the products that are available to you. So when it comes to working with us, working with myself, I have been in the business of selling insurance for since 2011. I understand intimately how to present any kind of insurance to anybody. Sales is simple. You have to identify the need and the desire underneath. You need to figure out if they can qualify for the product. And then you need to show your client not only why they should do business with you and sell yourself, but also why doing business with the alternative options are a bad deal. You want them totally bought into your solution as being the best outcome for them personally. And then you got to know how to ask for the business and deal with any objections that may come up. We teach you how to do all that. And you've got access to me on a mentorship basis for ongoing support to make sure that we rigorously teach you how to do this and instill in your mind exactly what you need to do, word by word, step by step, to sell more of your prospects mortgage protection insurance. You also have top mortgage protection carrier access. So one of the things that I explain as a benefit is I'm not a huge marketing organization by any stretch. You deal with me personally. So what's nice about that is that I don't have quotas like a lot of the multi-level marketers do. What they won't tell you is that they're going to be in a position to where they have to push certain products over others. They're going to promote them to you over time and try to influence your decision to a product that may not be the best solution for either your client or yourself. Whereas in my organization, I'm just interested in total access to different carriers so that we can get competitively priced premiums in place for our clients, as well as quality coverage, so that we don't have to worry about the risk of being replaced because we're overcharging, or that our clients may not get fully comprehensive coverage. So we have across-the-board access to the top mortgage protection carriers to help you out and to make sure you've got the best options to succeed. And then last but not least, there's maximum commission opportunity. I start agents off slightly lower in exchange for the training and support to get you up and running, but over time my goal is to move you up to the top level commissions. A lot of people in this business, unfortunately, mortgage protection start off at their 50% commission range, which is crazy, and then they pay full price for leads. Many of the mortgage protection products that we offer for starting agents are double in commission, and the price point on the leads isn't that much different. So there's not really any sacrifice that you're getting, except you have a much better upside. And really that's what you need in this business, ultimately, really from the beginning, is because lead costs can crush you, especially if your upside is so limited, because in a multi-level marketing scheme, there's so many other people above you that are taking a cut of the action. And if you really think about it, what are they providing you in order for that to earn, keyword earn, that cut of your business? Not very much. Whereas in this, there's less people involved. It's just myself and the organization above me, usually just a carrier. And so that leaves you the ability to make a lot more money and still be viable economically for me to do. So if you're interested in a program like this and you like the idea of mortgage protection, go to feagentmentor.com/contact and request my mortgage protection sales over video to see if this program is a good fit for you. You can watch it on your own in the comfort of your own house, look at the pros and cons, look at commission rates that we start off at, look at lead pricing points, and understand what to expect if you were to pursue a business like this. So, and if it's something that interests you, then you and I can talk personally one-on-one afterwards about getting started. Thank you so much for watching today. This is David Duford at Final Expense Agent Mentor at feagentmentor.com, where I help agents like you succeed in the insurance business. Thank you so much for watching. We'll see you next time. Take care.